Is everything headed in the right direction again, or should investors prepare for another swerve? A market status update in this week's fastest 4 minutes in finance. Hello, I'm Scott Inman. Well, there's been a lot of good news this week as it relates to the economy and the stock market. May inflation data was released on Wednesday and showed we are still seeing prices rise at a more tolerable pace. The Consumer Price Index was up just 0.1% from April to May and 2.4% year over year. Both numbers were a little lower than expected. Core CPI, which excludes food and energy prices, also rose 0.1% from April to May and 2.8% year over year, also slightly lower than expert predictions. Now, this would be good news in any circumstance, but it is especially well received in the current environment. The Trump tariffs have generally been predicted to create a spike in inflation, and so far, that hasn't happened. Now, it's still very early, and the trickle-down could still take hold, but we also know that there is hope that trade talks will bring tariffs down. The market has latched on to that hope. LPL research tells us that the market performance in May was the best of any May since 1990. The S&P 500 index posted a total return of 6.3% in May and is now positive year to date. 10 out of 11 sectors were in the green. Technology jumped 10.9%, consumer discretionary popped 9.4%, and communication services was up 9.6%. The LPL team recognizes that optimism for tariff resolution is a driver for that performance, but they also point out it was a good and strong earnings season. Information technology and communication services sectors were standouts in the earnings growth. And we believe that the market will always eventually return to fundamentals, and that may be happening. Now, when it comes to tariffs bringing about higher prices, it's also worth considering a counter opinion. First Trust Chief Economist Brian Wesbury writes that the link between tariffs and inflation is overrated. He agrees that prices for items that are tariffed might rise, but he also believes that that means less money left over to buy other goods and services, which would reduce those prices. He writes that tariffs, quote, shuffle the deck chairs on the inflation ship, but not how high or low the ship sits in the water. But the potential for a swerve is constant. Trade policy will likely shift again, and we should always expect volatility, and always remember that things are not as good or as bad as they may seem.
Want to become smarter financially in 4 minutes or less? Sign up at fastest4.com to get insights and updates like this delivered to your inbox weekly.